Hello, this is Adam Hewison. I'm coming to you from the digital studios of Market Club, and the market that we're looking at today is one we've looked at before, but this one is particularly interesting because of a couple of features I want to share with you today. We're looking at the S&P 500 index, and this is a daily chart we're looking at, and that's the symbol INX on Market Club. Now, there's two things I want to show you that really do stand out. This line that we're seeing right here, that's a 200-day moving average. This line that we're looking at right here is a 50-day moving average. Now, sometimes when these two cross, if this was to go up like this and cross over this line, it's called a golden cross. It means the trends are very strong. The trend should persist for some time. It takes a lot of energy to do that. So there's the 200-day moving average, which is still moving down. The 50-day moving average is moving up, but has not touched. So let me just take this off the screen to give you a little closer view. I'll scope this in a little bit. So you can see how close they are, like right here, but then they haven't crossed yet. Very, very interesting. The other key element here are these lines right here. What they're called are dojis. Basically, this is a Japanese candlestick chart, daily chart, and normally when you have a long top and a short center like that, and then another long like that, like this one here, like this one, like this one, it means that the buyers and sellers, so these will be buyers here, and these will be sellers here, are in unison. This is sort of a stalemate going on. Neither the buyers have the upper hand or the sellers have the upper hand at that particular point. Well, that all changed with the advent of this market going down yesterday. We're looking at this. This is the 16th. So on the 15th, which is right here, the market did move down. And I'm just going to take that and put our daily triangles in here. And you can see the daily triangles, which we don't use for trading, by the way, for index, but I just want to show you this moved to a 3-day low, and then today's continuation pattern has hit some things that some trend following techniques that you really want to look at. One of which is our old friend, the MACD, which is right, or the MACD sometimes it's called. That's crossed over, and that's heading down now, so that should put more pressure on the market. We've also moved into a mode here. I'll move this over here. And we moved into a plus 55. When you get plus 55, it means it is a trading range as opposed to a strong upward or downward trend. So this is a trading range. So plus 55, we consider that neither going up, going down, more of a trading range. So that's another thing to look at. Now, taking this off the screen, I'm going to put another study on here. I'm going to go into our on-chart studies, and I'm going to go to put a parabolic. This is known by Wells Wilder to develop this parabolic stop and reverse. Very, very good program. Just click off there and it closes everything up for you. See how easy it is to use Market Club? Now, here's the parabolic lines. These little dots that you've seen right here, they go up. And when you go right over to the point that we're looking at right here, so you can see the parabolic is up here, 913.76, and it's 913.71. So we've broken the parabolic. This will end, the parabolics will start moving up here and then start moving down. So you've got two pretty important trend lines, this one here, and the parabolic, as the scale is going up, it's now turned over. You've got the MACD turning over. So I would suspect we're going to see some further downside erosion in this market. So there's something else I want to show you as well. There's a lot of things coming together at the same time for this market. So I'll take everything off the screen. I'll take our triangles off the screen. We'll scope this out a little further. And I'm going to take, just for our argument's sake, I'm just going to take our moving averages because we've seen what they are. And see how easy it is just to take this off. And I'm going to scope this in just a little bit. Okay, I'm going to go to our trend line tool, which is just click on there and it adds a little yellow box here, so which means you can just click here and drag this up. Now this is what's interesting. Okay, we have seen a break below the trend line right here. Now what that sets the market up for, in my opinion, is for a retracement. And what do we use for retracements in Market Club? We use our Fibonacci tool. That's right. Just click here. This is changed now to a Fibonacci. We click on the very highest point and then drag it down to the low point, which is right there. So you can see right now we're looking at the 889 level as a target. Now that kind of makes sense because you've got a lot of work right around here, which would lend some support, possibly going to the 38% retracement, which is 846.69. A 50% retracement takes you down to 812.25, and then finally 777.80. So potentially we could see this market come back down to the 800 level. Now we're 913.71 as we're doing this on the 16th, just before the close. So we're seeing this market potentially come down from present levels. Any rallies in this market now will be met with selling. We're back, as I said, we're back in a 55, I just put this 55% trading range, and that indicates we'll see more of a two-way market. Potentially we could see something like a potential head and shoulders build, and then a break, and then a move further down. But certainly the tenor of the market's changed, and I would look and expect to see more of a two-way market, but with the emphasis more on the negative as opposed to the positive. Hey, this is Adam Hewison from Market Club. Thanks for stopping by, and every success in